Hi, this is Zak Mir with the US Chartbreakers here at Zak's Traders Cafe for Friday, the 3rd of May. Starting off with the S&P, and it looks as though we will hopefully, with the indications pre-market, bounce off the floor of that rising trend channel from October for the final time, at least in the near term, and head back towards the 50-day moving average 51.30. End of day close above that, and we could retest the best levels of the year towards 52.80. But the top of that channel, 54.60, alas, a long way off. If we do break down anytime soon, then the favored support area would be 49.20 at the late January, early February support. The only thing missing for the bulls at the moment is the RSI still below neutral 50 after fading at 50, and maybe that will hopefully be corrected by the end of this session. Moving on to the situation at the Nasdaq 100, and here we have the bounce off an uptrend line there from the end of October. That's normally at 17,200. Above that, looking for a push to 18,100, and that March resistance line, obviously that goes through the 50-day line just below it, and then allows the prospect for or of a retest of the best levels of the year towards the 18,500 area. Obviously, we're eyeing up that resistance line projection from back in October, 19,500 perhaps as a target for next month if we maintain the uptrend line there from the end of October. Maybe on to the stocks, and a reappearance now in quite a dynamic way, Aspen, and here you can see that had a rising trend channel there shown in black, and the top of the channel there, 22.40. We've obviously overshot that and looking for the upper parallel now of that particular channel, which is heading towards $32, perhaps a target there for the end of next month. The resistance line there in question, the upper parallel from December 2022, but the key here, holding above our previous 22.40 resistance line target on an end of day close basis. One of the reasons the market's in fine fettle is Apple, and here you can see that we managed to gap through the recent resistance. So there is a new line of resistance there from back in December, and that is running at around the $188 level. So end of day close above that, and we could be looking for this market to head as high as $210 by the end of next month. On the downside, we want to stay above a recent resistance around $178, which at the moment looks as though it is achievable. One of the favorites here is coming up, and here it comes in the form of Carvana. We had a rising trend channel target there towards $108, which probably most people didn't believe would ever be hit. But the new situation is that above 108, looking for the upper parallel of that rising trend channel from back in June last year, currently pointing as high as $155. Perhaps that's a target for the end of next month if we remain above the top of that old rising trend channel from the early part of last summer. Another favorite here is coming up, and it's Cazoo Group here still trying to rehabilitate this situation. Obviously, it's been a long journey to the downside, but we have had at least a consolidation above a rising 50-day line. That's currently around $7, and we're hitting the top of that rising trend channel base there from the beginning of the year. That's currently normally around $11. Above 11, we could get to the $20 mark and retest what we saw back in March. I suppose the thing for cautious traders would be to wait for an end of day close through that $13 zone, given that has been a double peak for the stock in the recent past. The next stock to look at here is Emergent, and here we've nearly hit the top of that triangle. I suppose you could argue that the triangle is actually exactly where that line is now being redrawn. The good thing would be, though, that there's no end of day close back below the floor of the gap down there from March, around $2.90. Above that, then obviously a retest of $4.80 in the top of that triangle could be on the cards over the course of the rest of this month. Interesting setup coming up next for Gannett, and here gapping up. It was a bear trap island reversal, so gapping down and then gapping up over the last week or so. Rising trend channel there, the top of the channel there from back at the beginning of the year, currently around the $4 mark, and we're looking for that by the end of this month, while we remain above recent resistance around $2.70. A situation which I looked at just earlier this week is coming up next, and here it's Haoshi. Here you can see that we had a rising trend channel base, and the top of the channel there heading for $11.55. That's valid while we hold above the 50-day line around the $6.20 level. If you're more close to the market, then you could argue that $7.50 in recent resistance is the potential stop loss zone ahead of a move towards the $12 area. We looked at the following stock here quite a few times before, Lancetech, and here we got stuck at the 50-day line on several occasions now. Want to see an end-of-day close through that 50-day line, say call it $3 to be safe, and above that then the next level up would be up to $3.90. That was resistance back in February and also support in January. The stock to follow is NFT, and you can see there's a chance that it's just broken under that triangle there. The level in question around $3.30, and above that looking for the shares to at least test the floor of the gap down that we had last month in the $5.70 area for the rest of this month. Some bullish divergence coming in there as well, so lower lows for the start of May, but higher or equal RSI trace on that. We've looked at the following stock a couple of times before as well, Orchestra, and here another falling wedge situation, looking for progress above the 50-day line. That's currently around $5.30. Above that, then the next level would be up to $7, which was basically February-March resistance. But the key here, holding above that broken resistance line there from the beginning of the year. We move along to Sunova, and here bear trap gap reversal potentially, so a bear trap from back below the March support there around $3.80. Above that, hopefully the neckline resistance and that resistance line there from the beginning of the year around $6.20 could be on the cards over the course of the rest of the month, rather. I was going to say Friday. The other point to note is, I suppose, cautious traders might want to wait for an end-of-day close above the 50-day line, just over $5. But with that gap higher, it looks as though the shares could be on their way. Pitney Bowes is a stock which we had on watch in terms of potentially hitting the top of that rising trend channel that we had drawn from it, or for it, but from this time last year. The top of the channel there was $5. Above $5, though, we're looking for the upper parallel of that channel, a wider channel there, and that's from July 2022. That's heading towards the $6.50 area, which hopefully we could hit by the end of this month or even sooner. The last two are next, and first one is Safe and Green. Here another potential wedge breakout or triangle breakout. We're pushing through the 50-day line at around $4. Above that, looking for $9.40 plus by the end of next month. That would take the shares back to where they were back at the beginning of the year, but the key here is to remain above that 50-day line. Finishing off in a decent way with XBP, and here the situation is that we've got the shares, I suppose, bumping along the bottom. We've had a failure to get higher previously, so we had a broadening triangle there from the beginning of the year, but extending that, we still leave the shares with a chance of hitting a resistance line there from back in the end of January. That's heading for $5, basically where the shares were at the beginning of the year. And we're looking now for end-of-day closes above the 50-day line, now rising near the $2 level. So the longer we stay above $2, greater the chance of a move to $5, ideally by the end of next month. That's it for me today. More updates over the weekend.